Securities. Now let's move on to the commodity space, because of course overnight we did see really a sea of green across that whole complex. We saw copper prices doing well, silver, gold prices all sort of tracking higher there, and then of course the iron ore price, a big bounce there. About 11% or so that we've seen for the iron ore price over the last couple of sessions. Let's bring in Markus Helsing from JB Markets, who's live in our Melbourne studio. Here come the commodities again. Markus, what are you making of these moves? Looks like, yeah, ready to rock and roll.
Yeah, very much so. I think, hi, Leanne, thanks for having me on the show. Look, I mean, this is really the sort of sweet spot for us to see the beginning of a major new commodity bull market, to be quite honest. It might be a relatively short one. It could be a 1 year, 2 year show. We'll find out soon enough. But I mean, before we go into details, a lot of that has to do, in our view, with the US dollar. The US dollar on the index, on the basket, is really coming off quite significantly, and we believe that will accelerate even much more into the second half this year. Now, what effect does it have on a country like China? Well, China is pegged to the US dollar, so the competitiveness of China with a weaker yuan makes it, therefore, that much more competitive globally in what they do in terms of imports and exports. In other words, this is a good news story for Australia. This is a good news story for commodities that Australia exports. I mean, takes a look on a main key commodity, copper. To us, this is a market that's consolidated beautifully and is ready for a breakup. The iron ore price action of the last 4 to 8 weeks has been very convincing in terms of finding a bottom, finding support, and coming back and snapping back convincingly. So really, we think there's a real revival happening in the commodity sector. And I mean, if you take a look at the Aussie dollar, again, we are in this 12 months range between 72 and 77 cents. I mean, to us, this looks very bullish. We still believe, and I'm saying that for the last 6 months, we still believe the Aussie belongs into the 80 to 85 cent territory based on a terms of trade benefit, which we didn't have. We believe that will change. We believe the terms of trade from here onwards into September, December this year could improve significantly. And that is obviously based on what we export, which is iron ore, coal, and our key other commodities.
Speaking of coal, and I just wanted to get you and our viewers across some breaking news that we are getting through from Rio Tinto. Of course, we've been hearing from the Rio board that they were urging shareholders to approve Yancoal's $2.69 billion offer for those coal assets. They were holding a shareholder meeting there in Sydney, and we're just receiving confirmation from Rio that shareholders have approved the coal and allied sale to Yancoal. 97% of the votes were in favour of the coal and allied deal. Now, we know that we did have Glencore's offer there as well, but Rio backed the Yancoal bid in favour over the Glencore offer there. So, as we mentioned, $2.69 billion bid for those thermal coal assets. I'm not sure if this is one that you've been watching at all, Markus, because this bidding war between Yancoal and Glencore has very much been at play there. Certainly quite a good appetite. You know, coal, as we know, has been under pressure, but there's been a good appetite there for those coal assets.
Well, it's the old saying in the industry, expect the unexpected always. And I think it does show you a bit the Chinese macro play. And I mean, as much as we all hear the press and the news about coal is bad and everything else is good, obviously there's a transition phase and we're in the middle of it. It'll probably last another 10 or 20 years. So, I mean, there's quite obvious a situation where China and India will not be able to wean itself off coal. They actually need a lot of it. So, unfortunately, if you like it or not, that's just the case. So, in essence, we're well placed for that. And we just feel this could just be the beginning of one more renaissance in commodities. We don't believe that's anything we've seen prior to the previous in the previous booms, but nevertheless, this could be a significant 12 months commodity renaissance, and I think people should take that seriously. So we're actually quite bullish on the Aussie dollar. We're now really keen to see your sort of lead commodity, which is copper in our view, to take the lead role. I think it's well placed, price-wise, technically, as well as fundamentally. With all the talk about electric cars, we'll try to build an electric car with our copper. I mean, there's a lot of indications to us that your key commodities that Australia exports are going to be beneficial. So our terms of trade will improve from here onwards. This is good news.